Hey guys, GoldStreams here again with a trade on the 18th of February. Unfortunately, this trade, well, I want to say unfortunately, but it wasn't unfortunate. This trade was a loss. It was the first actual red day I've had this month, right? Which is insane for me. So it's been a really, really good month. We've been really, really patient. We've been reading price action really well. But I want to show you guys. So on gold, you come in the morning and I've obviously got the levels set out. Okay. And as you can see, the levels are very sort of simple today. You've got a nice resistance at the top side. You've got the previous 4-hour candle closing bullish. The 1-hour candle is still open at this point. It's still in the process of closing. I'm expecting the 1 hour to close bullish. I want to see simply a close above resistance. All right. That's all I'm looking for. I just want to see a close above 29.13 on gold. And for sells, I didn't like sells, but if sells were going to happen, because you have to be fluid in the market, I'm looking for a close below 29.08. So you can see me measuring ranges on both sides. On the top side, we had fantastic range of, like 100 and something pips. Let me just double check that for you guys. But yeah, we had range of 130 pips, and for sales, we had range of like 130 pips. So gold was in consolidation. We're waiting for a breakout to happen, right? Now, the person who's patient, the trader who's patient, the trader who's willing to wait is the trader who's going to win, right? I've seen so many accounts get blown in consolidation like this. I've seen people trade emotionally, and I've seen people trade some crazy ideas in consolidation, and they will take losses left, right, and center, and they will end up, instead of having risk limits of like 2%, 1%, whatever your limit is for the day, they will end up going way over that because they're trying to fight consolidation. You can't win in consolidation. Make a note of that. Stick it up on your wall. You do not trade in consolidation. Okay, especially in a range like this, right? This is not a range for you to be trading in. Okay, you had a range of like 30 pips. Gold in a 30 pip range is extremely dangerous, right? So anyway, we're waiting around. There was a lot of waiting around today. So we waited about an hour and a half, right? I'm assuming that you guys now understand by this point that the videos I upload onto YouTube are sped up. Okay, so we're waiting around. We're waiting just to see if we can get a close. Like I mentioned, a close above 29.13, right, on the 30-minute time frame for continuation of buys. Okay, I'm not trying to take an entry on retracement because it's consolidation. I'm not trying to take an entry of the 15-minute time frame because we had a bullish close on the 15-minute time frame above that level, but the previous candle didn't come up and break the wick, so it just wasn't. It just wasn't, ideal. The 1 hour time frame is a very, very strong confirmation, and the 30-minute is a very strong confirmation. When we've had a massive move up to the top side in Asian session like this, I like to wait for the higher time frames to close in my direction. If the 15-minute time frame is going to close in your direction, right? And if the 15-minute time frame is going to give you a breakout entry, in the 15-minute time frame, you have to wait for a buy for the previous high to be broken. All right. You have to understand that, and you have to risk less, right? So if I'm entering a trade in the 15-minute time frame, I'm going to risk, say, 1%. If I'm entering a trade in the 30-minute time frame, I'm willing to risk 1.5, 2% of my account, right? Because it's a stronger confirmation. But I'll show you. So today we took a loss, and the risk was managed. In fact, I even added positions to the trade. I was very, very confident in the trade. The 4-hour was bullish. The 1 hour, like I said, closed bullish. The 30-minute closed. It was a beautiful entry, a beautiful setup. I would take this setup 10 out of 10 times, right? That's something that you need to understand when you're making your notes, right? Understand if it was actually a good setup that you took, right? Because their setups are not bulletproof, right? Market structure isn't 100%, okay? So you have to understand that you can be prepared to take a loss. It doesn't mean that the setup was bad. The only thing you have to make notes on is how you could have managed risk better. All right. I was a little bit cheeky today, and I'll show you exactly what I did now. So as you can see, this 30-minute candle's flipping bullish, right? But we've got literally like 3-4 minutes for this candle to close. I'm not interested in taking buys. 3-4 minutes left. Gold is in consolidation. I'm waiting for the candle to close. I've put the blue line there, right, just to show you guys exactly where I need the candle to close above. Okay. Now, as the candle's coming to a close, the first entry you should see here, the first entry was on candle open, okay, with stops on the previous 15-minute candle. All right. And the first entry, let me just tell you exactly where the stop loss was. That's 30, exactly how big the stop loss was here for you guys. Okay. Right. So the first stop loss was around 25 pips. Okay. So you can see there the entry was taken on candle open. Stop loss was around 25 pips, which is just above the wick of the previous 30-minute candle. So at this point, I've got a 25 pip stop loss, and that 25 pips owes me is basically 2% of my account. All right. Now, as this candle is breaking the previous, right, the hourly high, right, so the previous 30-minute high. Okay, so the wicks are being broken on the 15-minute candle, 15-minute candles. The 1 hour high is being broken as well. This is where I entered my second position. Okay, and the second position was a 1% entry, right? But it doesn't mean I risked 3% of my account, and I'm going to show you guys exactly what I mean by that. So currently, I've got 2% risk in the market with a 25 pip stop loss. Okay. We're currently 2% risk in the market with a 25 pip stop loss, right? You can see there the second position was entered, right? 1%. And both stop losses now, right? Both stop losses now are sitting at around 15 pips, right? 15, 16 pips. I was expecting gold to have volume because we didn't have volume the whole London session. So I was expecting volume to carry on. The wick that you see on the left-hand side, I wasn't interested in just getting that wick fill. It was literally around 14, 15 pips. Okay. I was expecting gold to move past that wick. It was it was previous 4-hour candle high. So I was expecting gold to move up and start filling the range to the top. I'm not looking for 100 pips out of this trade. I'm not looking to catch the whole move. I'm looking for around 30 pips, 25 to 30 pips from this trade, from each position. All right. So again, keep in mind the pip counter on the right hand side that you can see. Okay. You can see that there's 2 positions open. So this is how Magic Keys would display it. On the top, where you can see now it says 17, 18 pips, that's both trades combined. That's not one trade. That's both positions combined. That's not one position running at 16 pips. Okay. Now the idea was for me, once this candle, if this candle continues to break above the 4-hour high, so the wick to the left hand side, I would have closed one of the positions and kept the other position running at BE. If the candle comes down and flips bearish and breaks its own low, then I would have closed both of the positions. Now, the reason I do it this way is because this candle has gone up, it's gone down, it's made its bottom wick, right? It's finished its business to the downside. It's come up and it's broken the wicks to the left-hand side. So it's broken the previous 30-minute high, it's broken the 1-hour high, it's broken the 15-minute highs. Okay, it's got nothing but clean range. The only thing that you can see on there, the only wick that this is struggling to break, is the previous 4-hour high. Okay. Now, when this did start rejecting a little bit, I thought about closing one of the positions, but we've had a very, very strong month. We've had a very, very good month, so I'm holding. Okay, I'm holding the position. I've got leverage on the account to hold the position. Like I said, we haven't had a losing day so far. So I'm holding. I'm expecting, volume to come up. I don't mind a little bit of retracement. The only thing that sort of frustrated me about this trade a little bit was when I was trying to close one of the positions as this candle was breaking its own low and not allow full stop loss to get hit. I was pressing my close half on my magic keys, and it just wasn't reacting. I don't know if I forgot to open magic keys on my PC. I don't know if I forgot to connect it, what happened. But either way, so we started out with 2% risk. We added another position of 1%. We brought our first position up, and we had a total risk of 1.7% in this trade, right, with two positions running. So that's how risk was managed. We had a full stop loss hit, lost 1.7%. And the other way we managed risk after this loss happened is we simply closed the charts, turned off the PC, and walked away. That's the best thing you can do when you lose a trade. All right. If you don't have enough leverage to give your trade another chance, don't look at the charts anymore. Don't tempt yourself to give your position another try, to give your entry another go. Just walk away from the charts. Okay. Anyway, guys, thank you very much for watching, and look forward to doing the next video with you guys.